Real Estate. Closing Settlement Statements by Sandra Cabra. The step that finalizes a real estate transaction is the closing. At closing, all amounts due are settled, the documents are signed, and the property changes from one owner to another. The Real Estate Settlement Procedures Act, or RESPA of 1974, is a federal statute passed by the U.S. Department of Housing and Urban Development, or HUD, to rule over the real estate settlement process. It makes it mandatory for everyone involved to inform and/or be informed of the costs and relationship between parties implicated in the transaction. Its goal is to streamline the procedure and fees, as well as deterring illegal activity such as kickbacks and referral fees. The document that certifies the transaction is the closing statement, or HUD-1. In it, all the charges to be paid by the borrower and seller are itemized, so that, at the end, the monies are properly dispersed. Any services related to the transaction that were paid before closing, such as appraisals or inspections, are identified by the initials POC, paid out of closing. Per the guidelines of RESPA, and as an ideal scenario, the buyer as well as the seller should receive a copy of the HUD-1 at least 1 day prior to closing, so that everyone can review and check for errors or omissions. These can be taken care of before finalizing the sale. Stephen Papermaster, president of First Title and Escrow Incorporated, based in Washington, D.C. and conducting business in 41 states, explains how First Title has developed a technology that allows their clients to receive accurate HUD statements. This could be done in one or two ways: through their nationwide closing cost calculator, or upon placement of an order, an instant HUD-1 can be reviewed. The HUD-1 is a 2-page document. Line items are coded by a letter, main areas and titles from A to L, and by numbers, sub-areas from 100 to 1400. Be advised that not all numbers in this range are used on the statement. Even though this seems confusing, the nomenclature is meant for clarification and organizational purposes. The form includes guidelines on where to post totals and where the figures come from. The top of page 1 describes basic information of the transaction: names of participants, property locations, type of loan, and date. Right below, the front page is divided into 2 columns. The left column is a summary of borrower's transactions, while the right is a summary of seller transactions. It is important to note that information on the right side pertains to detailed figures on back section L, settlement charges of the statement. As a rule of thumb, the buyer's closing costs are anywhere between 3 and 6% of the property price. It is important for the buyer to request a good faith estimate from the lender before getting the loan, and not to choose the loan based solely on interest rates. Upfront fees make a difference, and surprises at closing are hard, if not impossible, to debate. The seller also sustains closing costs, which may come as a surprise to some first-time sellers. The figure varies and could range anywhere from 2 to 8%. Seller closing costs may include, but are not limited to, broker's commissions, surveys, recorded release for the mortgage, title insurance, property tax, credit to buyer for unpaid real estate taxes, attorney's fees, home warranty, and in California most homes are sold with one, association reserves, and special assessments, unpaid mortgage and home equity loan or line of credit. Each transaction corresponds to a particular negotiation depending on the state where the property is located. Buyers and sellers could negotiate payment of closing costs, identified as incentives or contributions, and certain charges may be customarily paid by the seller in some states and by the buyer in others. Your real estate agent, mortgage and title company advisors will be able to assist you with the details of the settlement. The HUD-1 front page stipulates the summary of charges for each side of the transaction. Section J corresponds to the summary of borrower's transaction, lines 100 to 303. While Section K is a summary of seller's side of the transaction, lines 400 to 603. The buyer's side includes the gross amount due from the buyer, the sale price, personal property, and buyer's side of settlement charges. Adjustments for items paid by the seller in advance, like taxes and assessments. Amounts paid by or on behalf of the borrower, such as deposits or loans, and adjustments for items paid by the seller, taxes and assessments. Likewise, the seller's side of the transaction includes the gross amount due to the seller, for example, the sale price and personal property, adjustments for items paid by the seller in advance, such as taxes and assessments, reductions in the amount due to the seller, excess deposit, settlement charges, or loan payoff, and adjustments for items unpaid by the seller, taxes and assessments. Be advised that figures that relate to both buyer and seller, for example, taxes, maintenance, association dues, assessments, rent, and those that are paid either monthly or yearly, should be prorated and posted on each side of the transaction. It is important to consider if these are paid in advance or arrears after the service is provided. These adjustments are shown on sections J and K and are included under Adjustments for Items Unpaid by Seller. In these sections, items unpaid by the seller reflect as a debit on the seller's side and as a credit on the borrower's side. All costs are prorated and charged according to the exact amount of days each party is responsible for. At the bottom, lines 303 and 603 reflect the amounts to pay and/or be paid by the buyer and seller. Even though the closing settlement statement may seem a daunting document, it is a very clear and concise summary of the transaction. Carefully review it and make sense of all the items. The advisors assisting the transaction should be able to answer any questions. It never hurts to ask. You may point out an error everyone else might have missed.